All right, welcome everybody. My name is Jerry, and today we're going to talk about futures trading. Now, a few things I want to get out of the way up front because it's really important, things I have to do. First of all, I am not a financial advisor and I'm not a stockbroker, so I'm not giving you financial advice, okay? But if you want to tag along for a ride here and you find out that there's value in this video and value that could make you a lot of money, then you can decide for yourself whether that's something you want to participate in, okay? This is a free video. You're not having to pay for this, okay? And I think what I think I'm going to do initially is maybe put out a free video once a week, and we'll call that a freebie. And if you find out that's very valuable for you, then I'm pretty sure you're going to want to subscribe because you're going to probably make a lot of money on the trade. All right. Okay. Second, I want to say this is paper. This is a paper trading account. If you look at the upper left-hand corner, this is simulated trading. Way in the upper left-hand corner there. Okay. Obviously, it is a fake account. But yes, I do have a real account, and yes, I do trade exactly what you're seeing in front of you, or at least very similar to what you're seeing in front of you. I trade on these signals. Okay. This is the /RTY, the E-mini Russell 2000 Index Futures. Excuse me. The platform you're seeing in front of you is called TOS, also known as Thinkorswim, and that is by TD Ameritrade. So that's the platform you're looking at. So just a quick little summary. We're talking about trading the E-mini Russell 2000 Index Futures on the TOS platform that's owned by TD Ameritrade, okay? All right. I'm not going to go too deep into what futures trading is because that's a very deep subject, but I can tell you this, for me personally, futures trading is a lot more profitable than trading stock. That may not be true for everybody, but it's definitely true for me. So there must be something I'm doing right. But I don't want to lie to you guys. It's talk is cheap, as they say. Let's find out whether or not there's really money being made in what you're seeing in front of you, and do I have a service that can be valuable to you? Okay. All right. We see along the top here some orange rectangle boxes, rectangle shapes, and you see the word sell in there. And along the bottom you see the same thing, but they're green and they have the word buy in it. Now normally this would be red, guys, but I kind of hate red. It bothers my eyes, so I just put orange. All right. Now, I'm not going to go too much into what this is over here because this is the way TD Ameritrade does things. You can buy and sell pretty quickly by just clicking, okay? So we're not going to go into that too much. We're not going to go into the specifications of the E-mini Russell 2000 contract because these are contracts, also known as lots, okay? And we'll deal with all that in some other videos, okay? Let's talk about what we see here. There's obviously some logic or some rationale behind these signals, right? And yes, this is rationale or logic that I came up with, right? I'm a computer programmer or software developer by trade. I've been doing that for about 35 years. So there's a scripting language that goes along, a programming language, if you will, a scripting language called ThinkScript that goes along with the TOS platform. So that's how these signals are coming up, okay? Personally, I don't really like the ThinkScript very much. I don't think their scripting is very good, but it is what they provide, so I use it and make the best of it, okay? All right. So now you know a little bit about my background, my expertise in writing programs and software. It should be kind of understandable how I came up with these signals, right? At least the expertise behind it. Let's start on the far left here. Okay, let me expand this a little bit taller so we can get a little bit better view of these. These are called candlesticks for those who are not familiar. Each one of these candlesticks, vertical, red or green, okay? And we're looking at a 4-hour chart, so that means each one of these candlesticks is 4 hours. So that's 4, 8, 16, follow me, 20 hours, 24, right? So you see here is a buy indicator. And a very simple question, is it profitable? Well, you decide. Buy here and sell there. Okay. If I draw a line like that, That red diagonal line, does that look profitable to you? Okay. I think even a child could understand that this is going up, correct? Down, up. And we'll talk in a little bit, I'll show you a spreadsheet about how much money was made in this trade. Now in futures you can have one contract, two, three. Okay. I tend to trade small lots or small number of contracts, but if you have a lot of money, go for it. Trade 2, 3, 4, 5 lots. Trade 10 if you're comfortable with it. Okay, because there are margin requirements to go along with all this, and we'll talk about that in the future. So this trade is obviously very profitable right here. Okay. We'll talk about how much in a little bit. Okay. Let's look at the next one. The next event, if you will, going left to right, is a sell signal. Big old red candlestick. Red means bad. No, it doesn't mean bad. I just love it when I hear people say, "Oh, down, the market's down today. It's so bad." No, in futures trading, guys, up and down are both good. I want you to get that in your head right now if you don't know too much about futures trading. Up and down are both good. Take advantage of both sides. Okay, so was this a profitable signal? Well, again, take a look for yourselves. Was it? Even if you were at the low, okay, this little red line, even if you went from low to low, it's still down, right? Again, even a child can see from this point to this point is downward. So for those that may not be familiar with selling, we can actually sell something we don't have. That's allowed, otherwise known as shorting. So we are shorting this position and buying back down here. Now, you want to know what's great about futures trading, guys, and gals for that matter? It's not like trading stock where you have to have this massive margins requirement. In futures trading, buying and selling have the same exact margins requirement. That's right, you heard correct. So you can short with the same margin as you can long. Very convenient. Okay, clearly that was profitable. And if you rode this one out, you could see this went down for quite a ways, right? Look at the next one. Another sell signal. Was it profitable? Well, of course it was. It's just straight downhill. Okay. The next signal was a buy signal right here. Was it profitable? Barely. So I'm not going to sit here and blow smoke up your backside and tell you every one of these signals is perfect and you're going to be a millionaire tomorrow. That'd be a lie. Anybody that tells you that they can get 100% of their trades correct is probably lying to you. So here's one signal that's not a very good one at all. There's a little bit of profit in it, but you'd have to catch it. So this signal right here is not a good signal. So far we got 3 good signals, right, and 1 bad. You do the math. 3-to-1 ratio so far, right? 3 good, 1 bad. I'll take that any day of the week. Let's look at the next signal. It's a sell signal right here. Was it profitable? Oh yeah, it was. Look at that. It just, straight downhill. Yeah, you just look at this. It's just going straight down. It depends on where you sold, This is a 4-hour candlestick. So you may not necessarily sell at the low. You might sell somewhere in the middle of this candlestick, Okay. Straight down. And just looking to the right there, I see 15.15 on the far right of the screen. You can see me kind of scrolling up and down. 15.14, 15.15. You can always pause the video and rewind if you have to. 15.15. And we're going down to this candlestick here. We're at 14.98, guys. That is amazing. That is about 16 to 17 points. And just some quick math in my head. That is a huge, gosh, okay. That's about 160, gosh, I don't even know if I can do the math in my head. It's just a lot. 160 plus another 160 ticks, okay, plus another 20 ticks, about 180 ticks. Yeah, in futures trading we have points and ticks, so I'm just doing the math in my head. 180 ticks times $5 per tick in this particular futures. So that's 500 plus. That's $900 trade, guys. $900 in a period of 12 hours. Okay? Give or take, even if you were slouched at $600 or $700 at least in this trade. Okay, let's look at the next one. We're going to do one more, and then we'll go to a spreadsheet and I'll show you the profitability and all the trades you're seeing on the screen. Okay, let's do one a little bit further away. Let's do one way over here. Here's a buy signal, and it's a little early. It is a little early. Okay, and even if you happen to buy at the very high, you still made money here, guys. Straight up. It's true you got to sweat through these candlesticks to get there, but you made money. Okay, 1, 2, 3, 4, 5, 6 hours, 24 hours later, you made a nice chunk of change. Okay, and if you happen to be buying near the lower part of this body or even down here, then of course your profitability came sooner, right? Okay, so we had 1, 2, 3, 4, 1, 2, 3, 4 good trades, a bad one there, so 5 good, 6 good, this one real quick, 7 is good, 8 is good, here's a bad one, so we have 8 good, 2 bad, this one's really good, crazy good, look at that one, guys, oh my gosh, whoops, sorry about that, got away from me a little bit. Look at this one, how good is this, straight up, wow, just crazy, right? Okay, so we have 8 good, 2 bad, 3, 4, 5, 6, 7, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so actually it's 11. We had 2 bad out of 11, so it's 9 good, 2 bad. Good trade there, and we don't know about this one yet. Okay, so 12 trades, 2 bad, 10 good. You do the math, guys. 10 good trades, 2 bad trades. Going back about, let's see, Friday to Fridays a week, and back to Monday, you know, about 6 or 7 trading days, something like that. 1 Friday, 2 Friday, 3. Okay, maybe about two full weeks of trading, 10 trading days. And we had 10 trades over that period. 12 trades over that period. 10 were good, 2 were bad. Yeah. You made a lot of money. Okay, let's switch over to the spreadsheet. We're going to tally all this up and see what the profit loss margin, what the profit loss was in all this, okay? So hang with me, I'll be right back. Okay, so here we are on the spreadsheet now, and you'll notice that there are exactly 12 events that match what was on the TOS platform. And I took the time to put in quite a bit of information here just to show you guys exactly what's going on, and kept it all very real. So on 11/9, we had a long or a buy, and the entry was at 12 p.m. Remember, these are 4-hour candlesticks we were looking at, remember? And we exited at 8 p.m., which was 8 hours later. I'm only considering one contract at a time here. We could be trading 2 contracts, 3. Okay, so lots, contracts, same thing. Okay, so the entry price, when we got into the position, we got in at the entry price, which I always use the close, guys, which means I'm making my trades at the very last second, okay, right at the very end of that 4-hour period. Okay, at the very, very end or at the very beginning of the next 4-hour period, like in a matter of seconds, right? So that's why you see close here. Okay, and we'll talk in another video about how I determine where I exit, but in this case I exit at 1556.8. You can see some low in here and high. I'm just recording all the data so you guys can always go back and look for yourself if you really want to prove out that what's on the screen here is true, okay? And since this is a long position, meaning we buy, right? We're buying low and selling high. The way I did the exit price, which would be pretty close to what I normally do in real life, would be the difference between the open and the high. Okay, so the open was 1556.8, The high was 1561.9, and the exit price is right between those two. And in a 4-hour period, you could probably get an exit somewhere between the open and the high. Okay. Now a lot has to do with when did the high happen and stuff like that. Okay. But in any case, that's probably pretty fair to say you should be able to exit that position somewhere between the open and the high within the 4 hours. Okay. In this case, $420 on a one contract trade. It took 8 hours to make that money. Okay, so you tell me, how many of you are making $420 in 8 hours? Okay, some of you are. I mean, some people are making that kind of money in 8 hours. Okay, but just remember, this is only one contract, and in a minute, in a little bit here, I'm gonna show you just how good this gets when you trade. Just move it up to 2 contracts. Okay, let's look at the next one going below this on November 12th. This was a short instead of a long, so we sold instead of bought. Came in at 8 a.m. We exited 8 hours later. One contract. Entry price was 1532.7. We exited, the open was 1522. You can see all the data there. And we finally exited at 1518.5. Okay. Now for shorts, the way I determined the exit price, which again pretty much matches very close to what I do in real life. This is between the open and the low, right? So the open here is 1522, the low is 1515, and you can see the prices in between at 1518. That's fairly realistic. You're probably not going to be able to hit the low right on. Anybody that tells you that they're exiting their positions at the high or the low with the intention to make maximum profit is probably lying to you. Okay, so I try to keep it real. Okay, I'm trying to exit somewhere between, in this case, since it's a short, I'm trying to exit somewhere between the open and the low. Okay, if I catch the low, that's great. That's maximum profit, but that doesn't normally happen. Okay, so somewhere between the open and low, in this case, I took it halfway. I think that's pretty fair. It's pretty realistic. The profit for this trade was $710. It took 8 hours to do it. Okay, let's look at the best trade that we had during these 12 events, or over a period of about 12 working days, more or less. Okay, the best one was $1,540 in 8 hours. That's a nice 8 hours, right? The worst. Let's look at this one. Let's go over the worst one because I want you to see that not every trade is profitable. Let's talk about trades that go bad. This is a trade that went bad. November 23rd, it was a short. Got in at 4 a.m. Again, just for now, we're doing one contract, one lot. The entry price was 1474.4, and we exited at 1487.6. Okay. Right? Now, the whole point of shorting is to to sell high and buy back in low. Right? But we got in at 1574. Right? So we're selling high and we want to buy back in low, but unfortunately we bought back in at 1487. Okay? And we lost $660, and it happened pretty fast because you're going to know when a trade is bad. It's going to turn bad on you fast. And you're not going to hang around, usually, anyway. But though you could, there's other things going on, other indicators that could help you to stick around if you believe that trade's going to turn good. Okay, but that may or may not happen. In this case, the candlestick was really moving really bad against us, so there's a loss there, okay? All right. And then you can look at the rest of the data. You can always rewind the video, pause, and look at this spreadsheet, okay? So look at the top left here real quick. We started on 11/9, and the last day was 11/29. November 9th through November 29th, okay? Now, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different days. Okay, 11 different trading days. So let me trade. I had it at 12. We're over here under trading days now. under the column K, and we're down by trading days. We change that to 11 because it's really 11 trading days. Okay, so the total profit or loss for these 11 trading days was $5,710 in our favor. Significant amount of profit there. That's about $519 a day. And there's about 250 trading days per year, guys. Now, the reality is you're not going to catch every one of these trades because, you got to sleep. These are 4-hour periods. You're not going to trade every single one of these. But this is just giving you an idea what's going on. Okay. And in this case, $129,000 a year just on one lot trading. So watch this, guys. I'm going to change this to two contracts for everything, and watch the price down here. Watch the profit loss. Watch this right here. Let me show you. Just highlight it right there. Watch that right there, the 57.10. Keep your eye on that, okay? 11,420. That's the power of once you have significant enough money to trade two contracts instead of one. And what does that mean? A significant amount of money. We'll talk about it in the future, but basically you have to have enough money to cover your margins. And there's a lot of different stuff going on. A lot of some guys and gals are trading the day session only, and they get reduced margin requirements, but then they can't really trade at night. And a lot of them will say, forget the night, it's not worth it. But I trade day and night. Maybe not every single day I do that, but I trade both sessions. Okay. So if you're going to trade night, you don't get the reduced margin. So there's just things we'll talk about in the future. But basically, 2-lot trades, you're going to need a little bit more money to trade compared to 1-lot trades. Okay. So there you go, guys. I mean, you can clearly see. You can go back and look at these numbers yourself. It isn't too hard to Google and look up the RTY futures contracts. Look at these specific dates. You can pause the video. You can go get that information yourself. You don't, it's really easy to confirm. I'm not going to sit there and lie to you. You can confirm this data for yourself, okay? And you can see that at least over that period of time, and we can look at some other dates in another video in the future, which we will. I'll try to put out a video a week. Hopefully I'll have enough time to do all that. And so far this has been very, very profitable. I hope you guys like what you saw in this video. And I'll put a little description in the bottom of the video. For right now, we're going to be putting out one video a week. Hopefully it'll be a bit of a freebie. But in the near future, we're going to put a subscription out for those that want to get this information, let's say, 3 or 4 days a week rather than just once a week. And we'll talk about that when that becomes available. I really appreciate you guys taking the time to watch the video. I hope you really liked it. Hey, listen, guys, if you liked the video, go ahead and subscribe to the YouTube channel. Make sure you give me a thumbs up. And go ahead and click that little bell so you'll be notified of future videos, because I might put out notifications and you want to catch the trade in a 4-hour segment. So just be aware of that. All right, guys, thanks for hanging with me. We'll talk to you again real soon.